Welcome to AP Professionals. So in the earlier part, we understood the principle of arm's length criteria, right? Arm's length principle. Now that principle technically, as you understood, that it says that if there's a transaction which has happened between the controlled under the controlled circumstances, then you need to compare that transaction if the same transaction would have happened between the independent enterprises, and appropriately you should make adjustment if it is if you are required to make adjustment, so that the value of the transaction which has happened between the related parties is equal to the value of the transaction which have happened between the independent enterprises. Now guys, this is simple thing. This entire thing what we call is ALP analysis, right? This is what we call ALP analysis. Now guys, when we do this ALP analysis, there are two important parts of this analysis, right? I'll just share my screen and we'll go ahead to learn what are those parts. So guys, these are two important parts of ALP analysis, right? Part 1 is basically functional analysis, that is which considers the factual aspects of the transaction, and part 2 is economic analysis, that is comparing the transaction with the market economics, right? So that is what entire ALP analysis revolves around, right? Now we'll go ahead with because today's topic is functional process, so we'll have our focus on the functional analysis. We'll understand that part. Now functional analysis is basically identification of the commercial or financial relations between the associated enterprises and the conditions and economically relevant circumstances attaching to those relations in order that the control transaction is accurately delineated. What it means? So first, there are certain factors through which you need to identify the commercial and financial relations between the associated enterprises. It is not that both enterprises are associated enterprise. We saw the definition of associated enterprise. So this doesn't speaks about the definition of associated enterprise, but you need to identify that relationship, what type of relationship exists between these two associated enterprise. Technically commercial or financial is also not the answer, but you need to understand that what type of commercial or financial relationship, right? There are aspects to that. So that you need to understand. So there are some factors through which you need to understand the commercial and financial relations between the associated enterprise, and the conditions, obviously that's a part of that, and economically relevant circumstance as attaching to those relations. So in case there would be some economics related to that transaction, so you need to understand that part also, and you also need to understand that whatever things what you are capturing as a part of that understanding, that should be accurately delineated, right? Now what accurately delineated means, that also we'll study in the coming part. Now I'll just share the process or the certain parts of this entire functional analysis process. Now as I said that there are factors by which you can identify the commercial and financial relationship between the parties, right? Now there are two associated enterprise, right? Now they must have done something so that they have come up to you to wherein you are required to justify the wherein you are required to arrive at arm's length price, correct? So what are those factors that you need to identify? So guys, as you can see here, first you need to understand that certain contractual terms and agreement which must have been happened between the parties. So that is one of the criteria from where you can identify the type of relationship between both the parties. Then functions performed, assets employed, and risk assumed by each of the party to the transaction, correct? You have to understand that entire part as well. Then characteristic of a property or service. So now what type of property or service has been exchanged or transferred or sold or purchased? Now for tangible properties, you need to understand the physical features of product, volume, quantity, quality, etc. I'm sorry for that. Then for provision of services, that is nature of services, scope of services in case if it's a service transaction. And for intangible property, DEMPE functions. We already understood DEMPE functions in the day 2, right? So these are certain factors through which you need to understand that what type of relationship exists between these two parties. Now the fourth point is economic circumstances of the parties and the market in which they perform. Obviously one party, so if there's one associate enterprise based in UK and the other is in India, there would be geographical differences, economical differences. All right, so these circumstances also should be taken into account when you are identifying the commercial or financial relationships, right? I have just mentioned certain of them, like geographical location, market competition, industry growth drivers, governance and challenges, or any other relevant factors, right? These are all certain economic circumstances which you should take into account when we are doing functional analysis. And the business strategy is being adopted by those enterprises. Like for example, if a company MNC group wishes to enter into India, they would apply some marketing strategies. If they are going to set up manufacturing, then first they'll go with the job work part, and then after they will set up their plant, and then they have to see that whether the product works in India or not. So these are certain business strategies also practically which they must have applied, and with the help of this entire thing you will be able to understand the relationship between the two entities, how they are dealing with each other with respect to the transaction, that is the control transaction or control circumstances, right? I hope that clarifies. I'll just come to the next point, which says that the concept of accurately delineating transaction assesses the actual conduct of the parties to the transaction relative to the provisions stated in written agreements between them. So guys, if someone client comes and says to you that we have done our role in this entire transaction was this etc., you need to understand that you need to understand the actual conduct, what has happened. So to do a functional analysis, you need to stick on the factual part. You don't have to rely on just a type of agreement first of all. So that is where accurately delineating means basically you have to be precise, and you have to understand the precise precise aspects, or precisely the aspects of that transaction. So now let me just give you example. Okay, now if there's an entity which is based out of Germany and which has its own brand, right? Now that entity also sells goods to the other entities. Now if that entity has distributing entity in India, then that entity would be selling the goods in a wholesale to the Indian entity. Now that Indian entity then would be selling that products in the local market, right? Now there is a sale transaction, but apart from that there could be also one more transaction which could be giving of that brand or patent rights, right? So obviously the entity which is there in India, which is a related party of that German entity, is using the brand of that which is being owned by that German company, right? That is where there would be also a royalty payment for that transaction. That needs to be, right? Because then only you can delineate those things, right? So there are precisely two types of transactions. So in case someone comes, this transaction needs to be closely linked with the sales, or have to be merged with the sales transaction, then as a consultant you should be able to understand that part, that how you need to precisely capture the facts pertaining to this both transactions. This is what the theoretical concept says about. Sorry, we'll see practically how we have to deal with such transactions. Also, I am coming to point number, the subsequent point, which is, it is important to keep in mind that actual transaction may need to possess the commercial rationality of the arrangements that would be agreed between unrelated parties under comparable economic circumstances. However, it is important to understand that merely because a transaction is not encountered between independent parties does not mean that it should not be recognized, or that is that it does not have the characteristic of an arm's length arrangement. So sometimes what may happen, this usually happens with the tax authorities, where they will try to surpass the factual aspects, and they will try to characterize transaction if that transaction would have been characterized in an independent scenario. So they don't appreciate the factual aspects. So that is where it needs to be kept in mind that actual transaction may need to possess the commercial rationality. So there could have been some reasons through which such arrangement would have been made between two parties, right, two related parties, and that should be, so that if the same arrangement is not there with the third parties in any of the practical market scenario, you may come across such type of situations, then also you should be able to justify that it is commercially possible. However, if there is no such arrangement in the market, then it's fine. But in your case, if it was commercially rational, then it's fine. You have to justify that part before the tax officers, right? These are theoretical concepts. Let me tell you this, friends, these are just theoretical concepts that which you are required to keep in mind, because these are fundamental. So that's where they are of paramount importance, and they set the base for what we are going to do and what we are going to learn under the subsequent part. Merely by seeing a TP report, you may not understand, or you cannot just copy paste the TP report. You need to have the mindset to understand that how you need to take a functional analysis, right? I hope I am clear on that aspects. Now guys, we go to the part 2 of this entire functional analysis, of this entire ALP analysis. Now what is economic analysis? Economic analysis is basically I am comparing the conditions and the economically relevant circumstances of the control transaction as accurately delineated with the conditions and the economically relevant circumstances of the comparable transactions between independent enterprises. This is a theoretical definition. What is economic analysis? That is basically I am comparing the factual part with the market economics, right? That is as simple as that. When I am doing such thing, I have to compare also, right? First I need to understand the factual aspect of that entire transaction or arrangement, right? The second part is I have to get into the economics of that part. I mean, I have to understand the market economics of that entire thing, and that is what we call economic analysis. In today's session, we are just covering the functional analysis process. I hope this you are learning something out of the same. In case if you find it complex, just relax, just keep calm, just understand what I am trying to say, and even if you don't understand, that's fine. We are going to the practical part in the next video. I'll see you in the next video where we are going to now practically deal with functional analysis. Thank you.